The New York Stock Exchange is currently closed. As of the market close on Monday, December 22, 2025, D-Wave Quantum Inc., trading under the ticker QBTS, finished the session at $32.19 per share. This represents a massive intraday surge of $5.37, or a 20.02% increase from the previous close. Trading volume was exceptionally high, with over 62 million shares changing hands, more than double the three-month average. If you were watching the tickers yesterday, you saw something that felt like the peak of a speculative bubble, but the reality underneath this movement is far more calculated than a simple retail pump. While the general market narrative suggests that quantum computing is a decade away from doing anything useful, D-Wave just proved that the market is beginning to value utility now over perfection later. Most investors are still waiting for a fault-tolerant gate-based computer from the likes of Google or IBM to change the world, but D-Wave has taken a different path by focusing on annealing technology. This is the first time we've seen the market explicitly reward a company for moving away from the purely experimental and toward commercial contracts that actually show up on a balance sheet. While most people are distracted by the massive price swings in NVIDIA stock or the steady growth of Apple stock, this 20% jump in QBTS is a signal that the infrastructure of the next decade is being bought and sold today. The common belief about D-Wave has always been that it's the other quantum company, the one using a specialized, less flexible process called quantum annealing. For years, critics said this wouldn't scale or wouldn't be as powerful as the gate model systems. However, the contrarian take that is now driving the price action is that D-Wave doesn't need to be a universal computer to be a profitable one. By focusing on optimization problems, things like logistics, financial modeling, and factory scheduling, they have found a way to bypass the massive error correction hurdles that are currently stalling their competitors. While everyone else is trying to build a brain, D-Wave built a high-speed calculator for the world's most complex math problems. This is exactly why we are seeing institutional activity ramp up, with nearly 42% of the float now held by professional funds. When you look at the heavy turnover on Monday, it wasn't just individual brokerage accounts on a Robinhood app chasing a green candle. It was a repricing of the company's entire probability of success. The immediate catalyst for this 20% breakout was the announcement that D-Wave will be a headline sponsor and lead presenter at the CES 2026 showcase in Las Vegas. The market is viewing this as more than just a marketing event. It's being framed as the moment where practical quantum meets the mainstream tech ecosystem. In an environment where every company is trying to figure out how to squeeze more efficiency out of their AI models, D-Wave is positioning its Advantage 2 system as the missing piece of the puzzle. We've seen a lot of interest lately in how quantum annealing can speed up the training of neural networks, and that specific synergy is what has traders excited. If you look at the technicals, the stock has been consolidating in a wide range for weeks, and this news acted as the spark that cleared the overhead resistance at the $30 level. Looking at the broader context of the market, this move didn't happen in a vacuum. We are seeing a Santa rally across the speculative tech sector, but QBTS is outperforming its peers like IonQ and Rigetti by a significant margin. This suggests a rotation of capital into the name that has the best revenue growth. Speaking of which, their Q3 earnings report from November showed revenue doubling year over year to $3.7 million. Now, $3.7 million might sound like pocket change compared to the billions moving through Tesla stock, but in the world of pure play quantum, a 100% growth rate is the gold standard. They also secured a massive €10 million booking for a research facility in Italy, which provides a long-term revenue floor that many of their competitors simply don't have yet. This is the kind of detail that smart investors find when they look past the headlines and into the actual SEC filings. What exactly does D-Wave do that justifies an $11 billion valuation on such small revenue? Their business model is built on providing access to their quantum systems through a cloud-based subscription service called Leap. Instead of forcing a company to buy a $15 million refrigerator-sized computer, they let them run problems over the internet. They've signed deals with massive organizations like BASF for manufacturing optimization, and even the North Wales Police for vehicle deployment logistics. They're solving traveling salesman problems at a scale that classical supercomputers struggle to handle efficiently. This is the reality that is starting to exceed the expectations of the skeptics. For a long time, the expectation was that these machines were just expensive toys for academic researchers. The reality is that they are becoming essential tools for Global 2000 companies trying to solve logistical nightmares. If you're managing your own retirement through Schwab Intelligent Portfolios or a Fidelity brokerage account, you know that volatility like this is a double-edged sword. D-Wave is still a deeply loss-making company, losing about $18 million in the most recent quarter on an adjusted basis. They have a massive cash pile of over $800 million, thanks to a huge capital raise earlier this year, which gives them a long runway. But the burn rate is real. This is why the stock is a favorite for active traders on an interactive brokers platform or the SoFi trading platform. It's a high-stakes bet on the future of computation. The current price-to-book ratio is sitting at a very high 13x, which is significantly more expensive than the average software firm. You are paying a massive premium for the possibility that D-Wave becomes the primary infrastructure for optimization in a world that is increasingly defined by complex real-time data. Comment below how many shares of QBTS you currently hold, or if you prefer sticking to more established names like NVIDIA. The institutional landscape for D-Wave has shifted significantly in the last few months. We are seeing names like Ancora Advisors and Larson Financial Group building new positions. This tells us that the smart money is no longer viewing this as a lottery ticket. They are viewing it as a strategic allocation in a diversified tech portfolio. When you compare this to the way people used to talk about the early days of online investing or the first wave of cloud computing, the parallels are striking. There is always a period of intense skepticism followed by a sudden realization that the technology is actually working. D-Wave appears to be in that transition phase right now. They aren't just selling a dream, they're selling compute cycles to some of the largest companies in the world. From a macroeconomic perspective, the push for quantum sovereignty is also playing a huge role here. Governments in Europe and the United States are pouring billions into domestic quantum capabilities to ensure they are not left behind by China. D-Wave's installation at Davidson Technologies in Alabama is a perfect example of this. It's a system dedicated to national defense and government mission-critical challenges. When you have the Department of Defense looking at your technology, you're not just a tech startup, you're a strategic asset. This gives the stock a level of geopolitical support that many other high-growth tech names lack. As we look toward the future, the primary catalyst to watch will be the full launch of the Advantage 2 system. This machine is expected to have over 4,400 qubits and significantly improved coherence. If they can demonstrate a clear quantum advantage, where their machine performs a real-world task significantly faster than the best available classical supercomputer, the current $32 price point might look cheap in hindsight. However, the risk is that a competitor like Microsoft or Amazon could announce a breakthrough in gate model computing that makes annealing look obsolete. This is the tension between the current reality of D-Wave's revenue and the future expectation of its technological relevance. The volatility we saw on Monday, with a 20% swing, is a reminder that this isn't a stock for the faint of heart. It's the kind of asset that requires constant monitoring, whether you're using a Fidelity mobile app or a sophisticated Robinhood stock trading strategy. The technical indicators like the RSI are starting to look a bit overbought in the short term, so a pullback to the $28 or $29 support level wouldn't be surprising before another leg up. Traders will will be looking to see if the stock can hold the $30 mark as new support. If it does, the next target for the bulls is likely the 52-week high near $46. In summary, the story of D-Wave Quantum right now is one of a company that is finally aligning its commercial reality with the market's high expectations. For years, the market expected too much too soon, leading to a long period of underperformance. Now the company is delivering actual revenue growth and high-profile partnerships, and the market is responding by aggressively repricing the stock. The contrast between the theoretical quantum future and the practical quantum present is where the value is being created. D-Wave has successfully claimed the practical niche, and as long as they keep hitting their technical milestones and signing up Global 2000 customers, the momentum is likely to stay on their side. They have moved past the phase of just being a research project and have entered the phase of being a legitimate, albeit high-risk, technology provider. Whether you're using a SoFi active investing account